Just because your insurance has increased doesn't mean it's your fault. Well, of course not. We're going to get into it in this video. Have you ever opened up your mail or your email from your insurance company and you see that there's going to be a rate increase next year, and you think to yourself, I didn't do anything wrong. How is it possible that the rate could have increased? Well, this situation is very common. All of us have experienced it, and I'm going to break down a few reasons why that rate may have increased for you here in this video. Number one, some states will change insurance rates. That's right, some states, like we live in North Carolina, have a rate bureau or some regulating body that allows insurance companies a significant amount up or down to increase or decrease rates. And so sometimes the insurance company is just taking the lead from your state government, unfortunately. And the government may come out and say, yep, hey, our analysis of the market would suggest that you can take a 10% increase on auto insurance or a 10% or 15% increase on home insurance. The market is undervalued. Conversely, there are times when the insurance regulatory bodies will allow rate decreases, and your insurance company may or may not take that insurance decrease. So realize that number one would suggest that it is not your fault. Sometimes the rate is adjusted at the state level. Number two, there is a global insurance marketplace. All insurance companies, doesn't matter which one, whatever one insures you, has their own insurance, and it's called reinsurance. A lot of times we hear about this as Lloyd's of London, potentially, or some other insurance market that helps insurance companies remain solvent so that they can pay claims if there is a problem. Realize that sometimes those reinsurance rates are set based on the global economy, not just your local economy. So your insurance rate increase may be largely due to the global insurance pressure that your insurance company is feeling. So how do you get around this? Well, look for the financial strength of your insurance company. If it's an AM Best A or A+ rated company, they have enough financial wherewithal to handle a large volume of claims without having to dip into reinsurance markets. That is what you need to look for. That doesn't always isolate you from a rate increase, but realize, again, it's not your fault. Sometimes it's just the global economy. Number three, sometimes rate increases or decreases are dependent on other lines of insurance. What I mean by this is this: insurance companies do have different insurance products that they sell. They may have bad experience with one versus another, and maybe they've got more bad experiences than good experiences. Remember, they're a business, and so sometimes because of the insurance company's maybe inability to run a good business, they have to increase rates for everybody. So again, realize that your insurance rate increase may not be your problem, may not be your fault, I should say. It is your problem, but it's not your fault because the insurance company may have mismanaged how their profit looks based on all the products that they sell. So, I know this isn't a good video, right? I mean, increases are increases. I don't really have a solution for you other than watch that financial responsibility score that the insurance company has. They're supposed to post it, they're supposed to rate it. You can ask your insurance company, hey, what's the financial rating for my insurance company that I'm currently insured with? Ask them that question. If they don't have an answer for you, find a new broker, because we all know what the financial ratings are. But if they do have a good answer for you, if it's an AM Best, A-, A+, somewhere in the A's, you're usually in a good, solid company, and those rates may not be affected as much as others. In general, that rate increase, it's not your fault. On behalf of all the insurance professionals here at Callahan & Rice Insurance Group, thanks for watching.